Hello everyone and welcome to day 21 of our 30-day trading podcast journey. Today we are diving into the crucial topic of setting realistic expectations in trading. As traders, it's easy to be drawn in by stories of massive profits or overnight success, but the reality of trading is often quite different. Unrealistic expectations can lead to frustration, burnout, and poor decision making, which is why learning to set achievable, sustainable goals is a cornerstone of long-term success. In this episode, we will discuss how to create realistic trading expectations and why patience is essential and how to measure progress in a meaningful way. So, if you ever felt disappointed by your results or pressured to succeed quickly, then this episode is really for you. Let's start with why setting realistic expectations is so critical for traders. Avoiding burnout and frustration. When we set goals that are too high or expect instant results, we are setting ourselves up for disappointment. Trading is challenging, and even experienced traders faces losses and setbacks. By keeping expectations in check, we can approach each day with patience and resilience, reducing the risk of burnout. Staying focused on the process. Realistic goals keeps us focused on the process rather than just the outcome. Focusing solely on profits can lead to impulsive decision and risk taking. But if we view trading as a skill to develop over time, we are more likely to make sound strategic choices. Building consistent progress. When you set achievable goals, you are more likely to stay consistent, which is the foundation of long-term success. Small, steady improvements adds up over time, building your confidence and helping you refine your skills without the pressure of unrealistic targets. Now, let's look at some common misconceptions about trading success that can lead to unrealistic expectations. The get-rich-quick mentality. Many new traders enter the market expecting the huge gains quickly. They see others post big wins online or hear stories about rapid success and think it's the norm. But for the vast majority of traders, consistent growth takes time. Trading is about gradual compounding success, not quick, high-risk profits. Expecting every trade to be a winner. Even the best traders have losing trades, and losses are a natural part of the process. Unrealistic expectations around win rates can lead to frustration. The goal isn't to win every trade, but to have a profitable strategy that works over the long term. Comparing your journey to others. With social media, it's easy to compare yourself to other traders and feel like you are not progressing quickly enough. But every trader has a different style, experience level, and financial situation. Trading is a personal journey, and setting goals based on someone else's achievements can lead to unnecessary pressure and disappointment. So, how can you set the realistic goals that keep you focused and motivated without setting yourself up for disappointment? Let's go over some tips. Focus on skill development first. Instead of setting profit-based goals, start by focusing on skill-based goals. Aim to improve your analysis, discipline, and risk management skills. These skills will ultimately lead to profit, but they can take time to build. Set small, achievable financial goals. Instead of expecting a 50% gain in your first month, consider aiming for constantly monthly growth, even if it's just 1 to 2%. Small steady gains are more sustainable and adds up over time. Track your progress with a journal. Use a trading journal to track your progress, not just in terms of profit and loss, but also in areas like patience, decision making, and emotional control. A trading journal lets you see progress in other aspects of trading, helping you appreciate how much you are improving beyond just the numbers. Trading is a journey, and developing the mindset to embrace the journey is a key to success. Patience is a competitive advantage. Most people give up on trading because they lack patience. By being patient and sticking with it, you are already setting yourself apart from most traders. Accept that growth will be gradual and remember that the skills you have developed will benefit you for a lifetime. Celebrate small wins. Every small win, whether it's a profitable trade, a disciplined exit, or a well-timed entry, is a step forward. Recognizing and celebrating these small wins keeps you motivated and helps you build confidence. Understand that setbacks are a part of the process. Losses and setbacks are inevitable, but there are also opportunities to learn. The best traders see losses as valuable feedback. Instead of feeling discouraged, use this experience to refine your strategy and grow stronger. And that wraps up for the day 21. Today we have discussed the importance of setting realistic expectations in trading, focusing on gradual progress and embracing the journey. Remember, trading success doesn't happen overnight, and the process is just as valuable as the outcome. By setting achievable goals and focusing on growth over time, you will building a sustainable path to success. Tomorrow we will dive into another vital topic, the importance of self-reflection in trading. Self-reflection can help you identify both your strengths and areas for improvement, making it a powerful tool for long-term growth. So be sure to tune in. Thank you for listening, and I will see you tomorrow for another day of insights on your trading journey. Thank you everyone.